Hi, my name is Nur Izzah Syazwani binti Muhammad Nizam and I will be the first presenter. For introduction, our group chose RHB Bank as the bank that examines return through its loan activity while managing liabilities in today's volatile market. So let's start with a little bit of the history. RHB is currently the fourth largest fully integrated financial service group in Malaysia, but its roots actually go all the way back in 1913 with Kuang Di Bank, which was Malaysia's very first local bank in Kuala Lumpur. Fast forward to 1997, RHB Bank Berhad was officially formed through a major merger of several banking entities. In 2005, they launched RHB Islamic Bank, making them a pioneer as the country's first domestic Islamic banking subsidiary. Later in 2013, they acquired OSK Investment Bank to expand their market presence. Today, they are heavily focused on digital transformation to stay ahead as the regional financial leader. If you look at the corporate structure at the bottom, RHB Bank Berhad stands as the ultimate holding company. Underneath it, they operate through 5 main pillars: Group Insurance, Group Corporate and Business Banking, Group Community Banking, Group Wholesale Banking, and Group Syariah Businesses. Moving on to their market positioning, RHB positioned itself as a top-tier, stable financial player. They operate under an integrated universal banking model, which basically means they are a one-stop financial center, providing everything from retail, corporate, and investment banking through insurance and Sharia products under one roof. They also have a strong agent connectivity guided by their Progress 27 regional roadmap. Singapore acts as their main strategic hub, linking up to seamless services across Malaysia, Thailand, Cambodia, Laos, and Brunei. Plus, they are very customer-centric, focusing on digital innovation like the RHB mobile banking app to make things easy for regular customers and SMEs. Lastly, let's look at the financial indicator which shows their financial resilience. Their total assets grew to 358 billion from 350 billion in 2024. Net profits increased to 3.4 billion compared to 3.5 billion previously. Their return on equity or ROE improved to 10.5% and their CASA ratio is at 30.4%. Overall, by balancing their role as a stable top-tier bank with agile digital initiative and good cost management, RHB ensures long-term sustainability.
For this section, I'll be presenting an overview of 3 services offered by RHB Bank, which is mobile banking service, credit card service, and personal financing service. The first service is the mobile banking service. Through the RHB mobile banking app, customers can perform various banking activities directly from their smartphone. For example, they can check account balances, transfer funds, pay bills, and make payments using BitNow QR. One of the main advantages of this service is convenience, as customers can access their banking services anytime and anywhere. However, users need an internet connection and they should also be aware of cybersecurity risks such as scams and phishing attacks. The second service is the credit card service. This service allows customers to make purchases without carrying cash. Credit cards can be used for everyday spending, online shopping, and even overseas transactions. In addition, customers may enjoy benefits such as cashback, rewards points, and special promotions. These features make credit cards a convenient payment option. However, customers need to use them responsibly because unfixed balances may result in high interest charges and financial difficulties. The third service is personal financing service. This service provides customers with financial assistance for various purposes, such as education, expenses, medical bills, home renovation, or other personal needs. One of the main benefits is that customers can obtain funds relatively quickly and choose a repayment plan that suits their financial situation. On the other hand, customers need to consider the interest or profit charges involved and ensure that they can meet their payment commitments. In conclusion, the 3 services offered by RHB Bank provide customers with convenient banking solutions, flexible payment options, and access to financing when needed. This service helps meet different financial needs while improving the overall banking experience for customers.
Assalamualaikum and good morning everyone. Today I will explain the impact of digitalization on RHB bank services. Okay, so on maybe mobile banking service, credit card service and personal financial service. First, mobile banking service. Digitalization has allowed customers to access banking service anytime and anywhere through the RHB mobile banking app. Customers can transfer money, pay bills and check their account balance without visiting a branch. This increased convenience and save time. For RHB, digital banking help reduce operational costs and improve customer satisfaction. Next, credit card service. Digitalization has simplified the credit card and card application process, allowing customers to apply online and service update more quickly. Customers can also monitor their spending through real-time notification and manage their card directly through the mobile app. This improves security and encourages cashless transactions. For RHB, digital technology helps detect fraudulent activities more effectively and speed up service delivery. Lastly, personal financing service. Customers now can apply for personal financing online without the need for extensive paperwork or branch visit. The approval process has become faster because digital system can access application more efficiently. This provides customers with quicker access to funds while helping RHB process application more accurately and efficiently.
We will now move on to the financial analysis for the year 2024 and 2025, starting with profitability. Firstly, return on asset increased slightly from 0.89% in 2024 to 0.94% in 2025. This indicates that the bank generated more profit from each ringgit invested in asset. Next, return on equity. ROE increased from 9.60% in 2024 to 9.85% in 2025. This shows that the bank became slightly better at using shareholders' money to generate profit. For spread, it decreased from 2.51% in 2024 to 2.34% in 2025. A higher spread means the bank earned more profit from its lending activities, which positively support profitability. Lastly, net interest margin slightly fell from 1.19% in 2024 to 1.14% in 2025. This indicates that the bank earned slightly lower margin from its interest-earning activities. However, the margin remains stable, showing that the bank still managed its lending and deposit activities well. In summary, RHB Bank profitability improved in 2025, shows in higher ROE and wider interest spread indicates stronger earning and improved efficiency. Next, I will talk about liquidity ratio. Liquidity ratio measures the ability of one company to fulfill its short-term obligation and financial commitment. The loan to total asset remains stable at 67.15% in 2024 to 69.23% in 2025. This indicates consistent lending activity without excessive exposure to liquidity risk. The liquid asset to total asset ratio declined from 3.30% in 2024 to 1.86% in 2025. This shows that the bank deployed extra cash into active investments like loans to get higher return. Overall, RHB Bank maintained a balanced liquidity position, supporting lending growth while ensuring sufficient liquid asset to meet its short-term obligations. Asset quality reflects the ability of bank to manage credit risk. The NPL decreased from 0.52% in 2024 to 0.49% in 2025, indicating an improvement in asset quality and reduced credit risk within a bank. The loan-to-deposit increased from 94.15% in 2024 to 98.17% in 2025. This means that the bank is converting a large portion of its customer deposits into loans. And finally, deposit to shareholder funds decreased from 7.67 times to 7.39 times. A lower ratio generally reflects a stronger capital position and reduced financial leverage. Overall, RHB Bank asset quality remains sound throughout the 2 years period, supported by low NPL level and stable deposit fund lending.
Hi. Okay, now let me explain about the capital adequacy. So first, we have to know the definition of a capital adequacy. So, capital adequacy is to measure the group's ability to maintain the sufficient capital to absorb the unexpected loss and financial risk. So, based on our calculation, as you can see in the slide, the core capital ratio decreased from 17.23% in 2024 to 16.14% in 2025. So this same with the capital to risk weight asset ratio that declined from the 19.83% to 18.54%. So the decline is indicate that the group's risk weight asset increased at a faster rate than its capital. However, both ratio remain well above the minimum requirement set by Bank Negara Malaysia. So, which are 7% for the group capital ratio and 10.5% for the total capital ratio. So, therefore, RHB Group maintain a sufficient capital to absorb the potential loss, support future business growth, and remain financially resilient. So, overall, despite the slightly decline, RHB Group continue to demonstrate a strong capital adequacy and good management. Okay, now I will present about the management soundness of RHB Group. First, we have to know the definition of management soundness. So, management soundness is to measure how efficiently the group control its administrative expenses relative to its total operating expenses. So, based on our calculation, as you can see in the slide, the administrative expenses to total other operating expenses ratio is increased slightly from 8.55% in 2024 to 8.85% in 2025. So, the increase is indicate that administrative expenses grew slightly during the year. However, the ratio is remain below 10%. So, this showing that the administrative costs were still well controlled compared to the group's total operating expenses. Therefore, RHB Group continue to demonstrate the effective cost management, efficient operational performance, and sound management practice throughout the period. So, in conclusion, RHB Group maintained a strong and stable financial performance between 2024 and 2025. So, for profitability, it was improved as both return on asset and return on equity, while asset quality also improved with lower non-performing loan ratio. Although for liquidity, it showed a slightly decline in liquid asset. So the group continue to maintain the sufficient liquidity to support its operations. So in terms of capital adequacy, both core capital and capital to risk weight ratio is remain well above the minimum requirements that set by Bank Negara Malaysia. So it demonstrate a strong capital position and ability to absorb the potential financial loss. Furthermore, for management soundness, it remains stable, indicating that effective control over the administrative expenses and efficient operational management. So overall, RHB Group remain the financially resilient, well managed, and well positioned to achieve the sustainable growth in future.